next segment, and actually the final segment, is maximizing the value of your real estate assets with real estate decision-making that is strategic. So this is a topic that I've always wanted to speak about. I try to make sure my tenants and my clients understand strategic asset management as it relates to managing an asset. It's not just the day-to-day of running the facility. It's preserving the value of that asset over the term. And what do you need to do to preserve that asset? So the first section we're going to discuss is developing an asset management plan. And I have provided you with a strategic asset management checklist, which is on the back side of the other packet in your folder. There's a picture of the Marquette interchange, and then on the back side of that would be your strategic asset checklist. This is a very helpful checklist that I put together that any asset manager would realistically benefit from. It may not all apply to you, but it's a checklist that you can use for your various facilities. The first section I entitled the Crash File Report. Now, while I'd love to take credit for that title, that is not the case. I do have a client that once emailed me some files that had their loan balance on it, their FIN numbers, who's on the LLC, who has the right to sign, who holds the mortgage, everything you see in the list here. What's the loan number? What's the mortgage payment? All these things, and they called it the crash file. And I couldn't figure out what it was, so I actually had to ask. And they said, well, if me and my partner both went down in a plane crash, any monkey could pick up and run our property because everything is right there that you need to just take over the day-to-day management of that property. It's really beneficial in a husband and wife situation where maybe one or the other is managing a property all these years, one passes, and then it's nice to turn over that file to them. Next, I discuss the value orientation report. And essentially, it's always important to know the value of your property at any given time. You may have purchased your property 10 years ago, but a lot of owners don't know perhaps what that facility is worth today. Another example is that you may have been in your facility for 20 years renting, and every year your rent went up 2%. No fail, it always goes up 2%. Well, 10, 15, 20 years down the line, that lease rate could be way out of whack with the market. And so making strategic real estate decisions, you can monitor the value of the property, of the market, what are comparable lease rates for that property at any given time, and know that perhaps it would be beneficial to go out and look on the market. It would also give you some leverage, as we discussed, in renegotiating with your current landlord if your current rents are above market. Typically, the assessments are on every municipality's website these days. Normally, you're going to be able to see the assessment for the last 3 years. I encourage tracking the assessment over more than one period so you can see trends within the municipality. And as a strategic real estate manager, you want to know when it's appropriate to challenge the assessment. You get very comfortable occupying your buildings over time. And while you complain that the assessments may be high, you can actually go back and challenge your assessments every year. How do you do that? With comparable sales that either a broker or appraiser can provide you. Assessments of comparable properties in the neighborhood. And so typically every second or third quarter is when the municipality will require you to submit your formal petition challenging the assessment. And it's a formal review, and there's consultants, typically appraisers, that you would hire that would walk you through that process to challenge the assessment and make your taxes lower on a year-to-year basis. Something very easy you can do, and you should probably revisit every few years. A couple of key recommendations that you want to make to your key stakeholders. You're going to go through the strategic asset management checklist, and at the end of it, you may have several recommendations that you may want to make. I'm still on the same page. One of the biggest lessons that we learned during the most recent recession was that people didn't know when their loans were coming up. They didn't know if their properties were underwater. And so businesses were literally shut down, as we all know, when they went back to the bank to refinance and realized their property was underwater and couldn't refinance. And then that would shut them down. Their capital was all dried up. So you always want to monitor that. And if it's a concern down the road, maybe it's something you should do today. I've heard several reports from various banks that interest rates will probably be 300 to 400 basis points higher. So we discussed the rates today are about 4.5% to 5.5%. So imagine 3 years from now, when those rates go from 4.5% to 5.5% to, we're talking 7.5%. These are leading economists from banks. So even though that deal may make sense today, it may not make sense 3 to 5 years from now when you have to go refinance and the interest rates are 4 or 5 points higher. So you just want to do a gut check today that you'll be able to refinance 3 to 5 years down the road. Always know your values. The key recommendations, we discussed challenging the assessment, and then developing, implementing an exit strategy. How do you get out of the property? A lot of companies I work with like to own multiple smaller facilities, 10 to 30,000 square foot facilities versus one big 100,000 square foot facility. And why? Because it gives you the flexibility to spin off those assets with an exit strategy as you contract. So having an exit strategy built out both on the sale and a refinance is just so key. Other creative things in here like land use. Maybe you have some extra land on your property. Maybe you have a 15-acre site in Brookfield and you want to spin off 5 acres and gain from the equity you have in that and keep the existing site. Maybe you're just sitting on an asset you don't need. So always look at creative things you can do to increase the value of your property. Finally, other useful analysis. The first thing, or the second point on there says investment analysis, owner versus buyer. That should actually just say own versus lease for your records, and we'll discuss that shortly. And then you always want to be aware of an interest rate sensitivity and loan analysis. We just talked about this. So your interest rate is 5% today. You owe $100,000, you owe $1 million. 5 years from now, if that rate goes from 5 to 7%, are you still going to be able to afford that $1 million asset? Is it still going to be worth $1 million? And so there's some really helpful tools that you can implement to answer those questions. It's complex analysis that does not get discussed enough.